Hello traders, the strategy I'm about to show you is a gold mine. It can qualify as the holy grail. This strategy is not like any other strategy. I have backtested this strategy and it works and it's reliable, very reliable. You need to watch this video from beginning to the end because towards the end I will show you a secret recipe that makes this strategy what it is and makes it to be more profitable and more reliable. So do not skip any section of this video. Now, very important that you need to understand that this strategy has rules. This is one of the best strategies I would ever show you that you need to know. So how does this strategy work? It works by identifying a trend and also identifying swing lows and swing highs. Like for example, this is a swing high, this is a swing low, this is a swing low, this is a swing high. All right, just need to identify swing highs and swing lows, and that is what you need to understand. And also you need to identify a trend, like this is a bullish trend in this case. So how do you go about this strategy? You need to apply a tool and be open-minded to learn new things. It will help you to become profitable. So what do? You, as I've said, you identify the trend, you identify a swing high on a swing low. This is a swing high, this is a swing low, this is a swing high, this is a swing low, that is a swing high over here. This is a swing low, swing high, swing low. So you need to understand that, identify the trend and identify a swing high and swing lows. So like in this case, so what do you need to do? You apply the Fibonacci tool. All right, so this is the swing high here and this is swing low. So if you are applying on a bullish market, you apply it from the swing low to the swing high, right? If you're applying the Fibonacci tool to a bearish market, you apply it from the swing high to the swing low. Very important. So let me explain what I mean again. So if you're applying a Fibonacci tool to a bullish market, you are applying it from the swing low to the swing high, 1 to 2. But if you're applying a Fibonacci tool on a bearish market, you're applying it from the swing high to the swing low. Very important. So you're applying the Fibonacci tool in the direction of your trade, in the direction of the trend. For a bullish trend, from a swing low to swing high, and for a bearish trend, you're applying the Fibonacci tool from a swing high to swing low. Very important. So let us apply the Fibonacci tool to this. Okay, so for in this case now we have identified our swing high as this, our swing low, and our swing high as that. Okay, so let us mark our swing high and swing lows. So we have identified our swing highs and swing lows. All right, so I've shaded them. So now let us now apply the Fibonacci tool. So you apply it from the swing low to the swing high. So the next thing we need to now do is to identify our golden zone. Our golden zone is between 0.50 to 0.61.8. All right, so from here to here is our golden zone. These are the Fibonacci levels. Okay, so but we are more interested on the 0.61.8 to 50. This is our golden zone, so we shade it. Other Fibonacci levels so we have shaded our golden zone. This is called the golden zone. The Fibonacci level in between, the space in between the level 50 to 61.8, that is the golden zone. So that is what we're going to mark. We've marked it. So once we marked it, we want price to retrace down to that level, and once price has retraced to the level, it gives us a break of structure to the upside, as in the case of a buy scenario, and then retrace to the level. This is going to be our entry. Okay, that's the entry for the trade. Are you seeing it now? That is going to be our entry for a trade. If you want, you can take profit midway. You can take profit at the other side of the fib at a swing high, or you can, you know, hold your trade if you want. But this is your take profit levels, like the halfway or and ultimately the swing high. So you can see that we had a break of structure here, and then the retracement to the 50 fib level. Even if it comes down here, this is going to be your trade. You get into the trade on that level. Okay, so let us see other ones. I'll be showing you another tool towards the end of this video, another secret recipe that you need to do in order to increase your win rate of the strategy. So do not fail to view this video to the end. Okay, now let us look for other examples, different example. Like, okay, see now in this case now, okay, see in this case, you have that this is your swing low, swing high. Now the market didn't come to our golden zone, which is the level between the 50 to the 61.8. The market did not come to our golden zone, which is the level. So the market came to the 38.2, gave us a break of structure to the upside and retraced back. This is supposed to be like the entry, but you might as well ignore when the market comes to the 38.2 or 23.8. For this strategy, I focus on the golden zone. Okay, which you have more higher level of probability of success. But here as well, if you apply this same principle to the 38.2, the market came to the 38.2, break of structure to the upside, retraced back, and this is supposed to be an entry, and it was actually a win trade. But then for me, I would ignore this signal and focus on when price comes to my golden zone, gives me a break of structure, and then buy up. Don't worry, I'll show you more. Something else I told you need to add to increase this win rate of the strategy. Now let us see if we have, okay, so here you can see here, this is a we just considered the buy scenario in the previous examples, but see here, this is a sell scenario. So for a sell scenario, I told you, you mark your fib level from the swing high to the swing low, since it's a sell scenario. Okay, so if you apply it, you're going to see that our golden zone was here. This is our golden zone. So in this case, the market came to this golden zone, the market bought up and broke out of the golden zone slightly above the 61.8, and then gave us a break of structure here and retraced back to the 50 level and sold down. This is a lovely setup. Okay, so you can see this, that there was a break of structure here after the market has come up to the 50 and 61.8, broke structure to the downside and retraced back to the zone. So this is our entry confirmation. This is our entry confirmation. All right, these are entry confirmation, break of structure, and then return to the levels. Traders around the world trade Fibonacci retracement, but no trader has applied this break of structure to the downside or to the upside as an entry confirmation. Okay, so I am showing you that this is what would make your Fibonacci retracement trading to be perfect, when you ensure that you are concentrating on the golden zone, and you also wait for this entry confirmation or break of structure to the downside, and then retracement back to your fib level. This is one of the secret recipes, in addition to the one I'll be showing towards the end of this video. For those of you who will stay to the end of this video, okay, I'll be showing you something else you need to add, or something else you need to do in order to make this strategy win rate to go up. Let us look for other examples. So you can see here, this is a swing high, swing low. So the market retraced up to the 61.8 and 50 level, which is the golden zone, and then when it got up to that level, the market retraced to that level, break structure, sold down, broke structure, and retraced back to the 50 level, and then sold down. That was our entry. You were taking a take profit here, halfway take profit, and then probably your final take profit will be at this level. Okay, from the level at the swing low. If it is with the buy scenario, final take profit will be somewhere around the swing high, and except you want to trail your stop loss. Okay, so this is it. So this strategy has worked on this case as well. So let us look for more examples. I just mark them in order to make them easier for us. So you can see here as well, there's a swing high, there's a swing low. So you're drawing from the swing high to the swing low, since it's the sell scenario. So here the market retraced up above the 61.8 level, break structure to the downside. The market broke structure to the downside here. The market broke structure to the downside and then retraced back, and this is going to be our entry to sell this market. Okay, so that was our entry to sell that market. So that was our entry, and you see how that the market came down to our final take profit. Even for those of us who would want to probably trail your stop loss, the market came up to our TP level, halfway TP level, and then final TP. But some of us who want to trail, you could still trail down. Okay, so let's look for other examples if we have. So here, this is buy scenario. We just consider the sell scenario in this case. So this is a buy scenario, and for a buy scenario, we are marking our fib level from the swing low to the swing high and to the top of the week. Make sure you are marking your fib level at the top of the week. Okay, so this is our swing low, swing high. Mark our golden level 650 to 61.8. The market came down to our golden level here. The market came down to our golden level here. See how it tapped to our golden level, broke structure here, and then retraced back here before buying up. Okay, the market came down to our golden level, broke structure to the upside, retraced back, and then bought up. Okay, that was a winner. So, and this is our final take profit. In this case, this is our stop loss. Stop loss will be just here, and halfway take profit, and final take profit here. Okay, and you can as well trail your stop loss if you want. Okay, so this was a winner as well. So let's see. Okay, this one as well here. Yeah, another setup. So you can see here, this is our swing high, swing low. The market retraced to the 50 to 61.8 fib level, broke structure to the downside. This is a break also to the downside and retraced back. This is our entry. Okay, that's our entry. This is supposed to be a final take profit. You can trail your stop loss. So our stop loss would have been here. Okay, see how that played out. Powerful setup. Okay, let's look for more. Okay, they occur all through your chart, are littered all through your chart. Here as well, this is a buy scenario. Swing low to swing high should have been marked, and then you draw your Fibonacci level from the swing low to the swing high since it's a buy scenario, and then you allow the market to for 50.0 to 61.8. This is your golden zone. The market breaks comes to that level, breaks up to the upside, break of structure, and then this is your entry, and you ride the market up. Okay, that's also a winner as well. Here as well, you can see how that this is our swing high, swing low. Okay, and then the market came up to our golden level, broke structure to the downside, gave us an entry confirmation here. Okay, and then you ride the market down, trail your stop loss if you want. This is our stop loss here. This is our entry. This could have given us about 1 to 3 risk to reward ratio. Okay, that would have been like a 1:3 risk to reward ratio. Then you can as well trail your stop loss down. Okay, so let's see another one. This is on Euro USD. We could later on we'll go to another chart, another market instrument, and see. So here as well, you can see how that this is our swing low, swing high. Market retraced to our golden level here, broke structure to the upside, but then by this candle, you can see this candle, market tapped back, returned. If you go to the lower time frame, this is a 30 minutes time frame. I'm using this strategy. If you go to a lower time frame, like 5 minutes time frame, you can see this retracement, this tap back clearly. So you could as well have this fib retracement marked on your 30 minutes time frame, and then or 50 minutes time frame, and shade your golden level. Okay, and then after shading your golden level, once the market is coming down to your golden level, step down to like 5 minutes time frame in order to find your break of structure, and then your return is clearer on the lower time frame. So this is our retracement back, return to the golden fib level after a break of structure above the golden fib level. Okay, so and that would have been our entry in that case. Okay, let us see more. All here, you can apply it in all of these swing lows and swing high. You would have applied it there. All right, you could have applied it, and you have, like in this case as well, you could have applied it, and you can see how that this would have been a retracement and then a sell. Okay, so it's littered all through your chart. So let us go to, this is Euro USD. Let us go to another chart like odd USD and see if that works as well on odd USD or any other chart. So on odd USD, you can see here. So this is swing high to swing low. The market retraced to 61.8 or golden level, and then broke structure to the downside, retraced back, and then sold. Okay, so here as well, this is swing high to swing low since they sell, and then the market came, tapped to our golden level, returned, broke the structure down, tapped back, return, to the golden zone, okay, and then sold. Powerful. So powerful strategy. So this is one strategy that's very, very important. So now I'll be showing you what you need to do. Something else you need to add. All through your chart, you can see how this works. Okay, apply to swing highs and swing lows on your buy trend or your sell trend, and you're going to see how that this strategy works like magic. So I'll be showing you right away. So I'll be showing you another secret recipe that you need to add in order to make this strategy even more lovely and even more reliable. So that is to say, you need to add your EMA. Okay, you add your EMA, and the EMA will be your 50 EMA. Add your 50 EMA to the chart. Right, so if you add your 50 EMA to the chart, you go moving average, right? So you click on the moving average, and then the period will be 50. So the shift will be 0. Exponential will be the method. Apply to close. Style will be 3 pixel and red color. You click on done. Okay, so when you click on done, you can see that this has been applied to your chart. The EMA has been applied to your chart. So once the price is above the EMA, it shows that it's a buy market. So as the candles are up above the EMAs, it's giving you further confirmation that this market is a buy market, is going to buy. Okay, so and if the candles are below the EMA, this 50 EMA, it shows you that indeed it's going to be a sell and gives you extra confirmation. So let's look, like in this case as well. So you can see that here the candles are above the EMAs, so that's a further confirmation. Even though we would not have taken this trade since the market did not come to our golden level. All right, it didn't come to our golden level. So here, this is a sell scenario, and you can see here that here, as the market tapped into our fib level after the break of structure, the market returned back. You can see how that the candles are below the EMAs. Okay, the candles are below the EMAs. Okay, so you can see how that the candles are below the EMAs. So we want to ensure that the candles are below the EMAs. So we want to ensure that the candles are below the EMAs on this strategy. So that gives us entry confirmation. Like for a sell scenario, the candle should be below the EMAs. On the buy scenario, the candle should be above the EMAs. So let us see other ones. So you can see, since this is a sell scenario, so immediately after the break of structure to the downside, you can see how that the market tapped back to a zone, and then EMA is above the price, or the candles are below the EMA, showing a sell, a further sell. So here also, after the break of structure on from the golden level, a retracement back, the candles are below the EMAs, showing, guiding you along, giving you extra confirmation that that is the right decision to take to sell. Here also, after the break of structure to the upside here and the retracement, the price intersected with the EMA, price or the candles above the EMA, and indicating that this is a sell. This adds further confirmation to your trade. You applying the 50 EMA to this is optional. You might not want to apply the 50 EMA, it's not a problem, but adding the 50 EMA could have as well increasing your success on this trade, all right, on this strategy. So do tell me how you see this strategy on the comment section. If you are yet to join our free Telegram community, please do not fail to do so. The link in the description box of this video. I share free setups and analysis that can help you trade at your own discretion. If you want me to take you by the hand, help you to become a better trader by training you on my one-on-one mentorship course, taking you through my one-on-one mentorship course, do not fail to chat me up on Telegram. My contact details in my free Telegram community, and the link to my free Telegram community is in the description box of this video. All right, how do you see this strategy? Do you love it? Kindly backtest this strategy, and I tell you, I bet you that this strategy is going to be a game changer in your trading success. All right, so till I come your way next time with another useful content, do have a wonderful day ahead. Bye.